In just the last 15 years, the role of the accountant has been quickly changing from a straightforward record keeper to a key player in the strategic direction of an organization. Much of this has had to do with the information available and the skills the accountant has in dissecting information to add value to the organization. So in the past, accountants maybe focus more on the stewardship and reporting functions, the preparing of the financial reports, and the auditing. Now accountants take active roles, in helping that enterprise really optimize the process, achieving that competitive advantage, and for sure maximizing that shareholder value. We've talked about that, the rapid changes in technology. We now have more and more data available at our fingertips. And the accountant is really a great person to go through that data and pull out what's really valuable to the firm. And that information is going to be the basis of a lot of very important decisions that management makes. Accountants are involved in supporting evidence-based decision making. When management gets together and does their strategic planning, their process improvement, or their compliance management, their time is better spent if what they're discussing is based on real data and information that has been pulled out of the system. This table that we see here summarizes those traditional stewardship, reporting, and accounting roles and duties that we're all familiar with. And then also goes into the management roles that are becoming increasingly more important when it comes to our business management support. Less and less of our time is maybe spent in the traditional reporting roles, and more of our time is being allocated to the business management support. So let's just take a look at the chart here. Regulatory compliance, traditionally that'd be finance and accounting processes, but we can also use that same information for management purposes. Our tax returns, accounting and finance, we do a financial close. And business managers, they can use that same type of information for planning, budgeting, and forecasting. We've got stakeholder assurance, financial reporting and analysis. But for management, the stakeholder assurance can become a performance type measurement, as well as the one below that, investor relations. That's something management is going to be monitoring and tracking. And traditionally, the accountant would be just providing that information to management. When it comes to raising capital and loans, that's something that for business managers, that's part of their risk profile, from strategic to operational, including fraud risk. Board reports. IT has definitely helped in that aspect for the accountants. They can use IT to make finance and accounting processes more efficient and effective. And of course, business management takes a look at those board reports. It's kind of an appraisal for them of how the business is doing. And then we've got statutory reporting. That's something that managers, though necessary, they would, try and do that in the most efficient, least costly way possible. So for accountants to be able to accomplish the work that we need to get done for regulatory reasons or just simply bookkeeping reasons, but then also meet all those management type demands and needs, a good documentation of our processes and systems should really be on hand. So, taking a look at the changing roles of the accountants, here in the business world, if we want to prepare for this, we need to really understand the business and how it collects and summarizes the data. Understanding how the business delivers value to its customers is definitely a great place to start, as well as understanding the risks that the business faces and the internal controls in place to mitigate those risks. Accountants also should understand how accounting information systems collects, summarizes, and reports the business process information. So a lot more goes into what the accountant has to understand that maybe in the traditional past 20 to 30 years.